Good day, my name is Venice Romuar and I'll be talking about income taxation. First, let's define income tax. Income tax is a tax on a person's income, emoluments, profits arising from property, practice of profession, conduct of trade or business, or on the pertinent items of gross income specified in the Tax Code of 1997. As amended, less the deductions, if any, authorized for such types of income by the tax code as amended or other special laws, who are required to file income tax returns. Individuals who are resident citizens receiving income from sources within or outside the Philippines. Employees deriving purely compensation income from two or more employers concurrently or successively at any time during the taxable year. Employees deriving purely compensation income, regardless of the amount, whether from a single or several employers during the calendar year, the income tax of which has not been withheld currently, resulting to the collectible or refundable return. Self-employed individuals receiving income from the conduct of trade or business and or practice of profession. Individuals deriving mixed income, for example, compensation income and income from the conduct of trade or business and or practice of profession. Individuals deriving other non-business, non-professional related income in addition to compensation income not otherwise subject to a final tax. Individuals receiving purely compensation income from a single employer, although the income of which has been correctly withheld, but whose spouse is not entitled to substituted filing. Individuals who are non-resident citizens receiving income from sources within the Philippines. Aliens, whether resident or not, receiving income from sources within the Philippines. There are also non-individuals who are corporations, including partnerships, no matter how created or organized. Domestic corporations receiving income from sources within and outside the Philippines. Foreign corporations receiving income from sources within the Philippines. And lastly, estates and trusts engaged in trade or business. Annual income tax for individuals earning purely compensation income. They are filing the BIR Form 1700 or the annual income tax for individuals earning purely compensation income. The documentary requirements are the certificate of income tax withheld on compensation, duly approved tax debit memo, if applicable, proofs of foreign tax credits, if applicable, income tax return previously filed, and proof of payment, if filing an amended return for the same taxable year. The deadline for submission is on or before the 50th day of April of each year covering taxable income for the calendar year 2018 and thereafter. Account information form for self-employed individuals, estates, and trusts. They are filing the BIR Form 1701 AIF or the account information form for self-employed individuals, estates, and trusts. The documentary requirements are none. The procedure is first, accomplish the BIR Form 1701 AIF in triplicate. Attach the same BIR Form 1701. The deadline for submission is the same as the BIR Form 1700 or on or before the 15th day of April of each year covering taxable income for the calendar year 2018 and thereafter. Quarterly income tax for individuals, estates, and trusts, including those with mixed income. They are filing the BIR Form 1701Q or the quarterly income tax return for individuals, estates, and trusts. The documentary requirements is the Certificate of Credible Tax Withheld at Source or the BIR Form 2307 if applicable. Duly approved tax debit memo if applicable. Proof of other payments made if applicable. Summary of alpha list of withholding agents of income payments subjected to withholding tax at source if applicable. The deadline for submission is first in the May 15 of the current taxable year for the first quarter, August 15 of the current taxable year for the second quarter, and lastly, for the third quarter, it is in November 15. So when you are thinking, if you are thinking when are you going to file the fourth quarter of the taxable year, it is not really required or necessary, because for the fourth quarter you're already filing it with the annual filing. Annual income tax for corporations and partnerships. You are filing the BIR Form 1702 or the annual income tax return for corporations and partnerships. The documentary requirements are the certificate of income payments not subjected to withholding tax, or the BIR Form 2304 if applicable. Certificate of credible tax withheld at source, or the BIR Form 2307 if applicable. Duly approved tax debit memo if applicable. Proof of foreign tax credits if applicable. Income tax return previously filed, and proof of payment if amended return is filed for the same taxable year. Account information form, or the AIF, or the certificate of the independent CPA with audited financial statements if the gross annual sales, earnings, receipts, or output exceeded 3 million pesos. And lastly, the proof of prior year's excess tax credits if applicable. The deadline for submission is in the final adjustment return or the annual income tax return. It is on or before the 15th day of the fourth month following the close of the taxpayer's taxable year. Account information form for corporations and partnerships. They are filing the BIR Form 1702 AIF or the account information form for corporations and partnerships. The documentary requirements are none. The procedures as follows. First, accomplish the BIR Form 1702 AIF in triplicate. Then, attach it in the same BIR Form 1702. The deadline for submission is in the same deadline as BIR Form 1702, on or before the 15th day of the fourth month following the close of the taxpayer's taxable year. Quarterly income tax for corporations and partnerships. It is the BIR Form 1702Q, or the quarterly income tax return for corporations and partnerships. Documentary requirements. Certificate of credible tax withheld at source, BIR Form 2307 if applicable. Duly approved tax debit memo if applicable. Previously filed return if an amended return is filed for the same quarter. The deadline for submission is the corporate quarterly declaration or the quarterly income tax return. It is on or before the 60th day following the close of each of the quarters of the taxable year. Earnings tax for corporations. The form that's gonna be filed is BIR Form 1704, or the improperly accumulated earnings tax return for corporations. Documentary requirements. Photocopy of annual income tax return or the BIR Form 1702 with audited financial statements and or account information form of the covered taxable year duly received by the BIR, and sworn declaration as to dividends declared taken from the covered year's earnings and the corresponding tax withheld, if any. The deadline for submission is within 15 days after the close of the taxable year. Annual income information form for general professional partnerships. In Section 55, returns of general professional partnership, every general professional partnership shall file in duplicate a return of its income, except income exempt under Section 32B of this title, setting forth the items of gross income and deductions allowed by this title, and the names, taxpayer identification numbers, addresses, and shares of each of the partners. Income tax rates. For individual citizens and resident aliens earning purely compensation income and individuals engaged in business and practice of profession. This is the graduated income tax rates under Section 24A(2) of the Tax Code of 1997 as amended by the Republic Act No. 10963. In 0 to 250,000 pesos, it has a tax rate of 0%. 250,000 pesos to 400,000 pesos, 20% of the excess over 250,000 pesos. 400,000 pesos to 800,000 pesos, 30% plus 25% of the excess over 400,000 pesos. 800,000 pesos to 2 million pesos, 130,000 pesos plus 30% of the excess over 800,000 pesos. 2 million to 8 million, 490,000 pesos plus 32% of the excess over 2 million pesos. 8 million pesos and above, it has a rate of 2,410,000 plus 35% of the excess over 8 million pesos. For purely self-employed individuals and or professionals whose gross sales or receipts and other non-operating income do not exceed the VAT threshold of 3 million pesos, the tax shall be at the taxpayer's option, 8% income tax on gross sales or gross receipts in excess of 250,000 pesos in lieu of the graduated income tax rates and the percentage tax, or income tax based on the graduated income tax rates. For individuals earning both compensation income and income from business and or practice of profession, their income tax rates shall be for income from compensation based on the graduated income tax rates, and for income from business and or practice of profession, if the total gross sales or receipts do not exceed the VAT threshold of 3 million pesos, the individual taxpayer may opt to avail 8% income tax on gross sales, receipts, and other non-operating income in lieu of the graduated income tax rates and the percentage tax, or income tax based on the graduated income tax rates. If the total gross sales and receipts exceed VAT threshold of 3 million pesos, income tax based on graduated income tax rates on certain passive income of the individual citizens and resident aliens. So here are the tax rates for the non-resident aliens and not engaged in trade or business. So here you can see the different types of rates for every scenario within the non-resident aliens and not engaged in trade or business. It has certain passive income, winnings, prizes, cash, dividends, and others. So you can see at the table what are the rates on each and every scenarios that it has presented. For non-resident aliens not engaged in trade or business. First, the gross amount of income derived from all sources within the Philippines. It is a rate of 25%. Capital gains from the exchange or other disposition of real property located in the Philippines. It has a rate of 6%, and the net capital gains from the sale of shares or stock not traded in the stock exchange. If it is not over 100,000 pesos, it has a rate of 5%, and any amount in excess of 100,000 pesos, it has a rate of 10%. For general professional partnerships, the net income of the partnerships is 0%. For domestic corporations, interest from currency deposits, trust funds, deposit substitutes, and similar arrangements received by the domestic corporations, it has a rate of 20%. Royalties from sources within the Philippines, 20%. Interest income from a depository bank under expanded foreign currency deposit system, it has a rate of 15%. Cash and property dividends received by a domestic corporation from another domestic corporation, it has a tax rate of 0%. Capital gains from the sale, exchange, and other disposition of lands and or building, 6%. And lastly, net capital gains from the sale of shares of stock not traded in the stock exchange, it has a rate of 15%. So here, it has the tax rate of for foreign for resident foreign corporations. So now you can see here that there are plenty of rates for varying causes. So thank you for listening.